Welcome back to FT Markets. Japan is going through one of the biggest ever experiments in economic policy. A massive boost in monetary policy from the central bank, together with economic reforms implemented by the government of Shinzo Abe, are meant to drag the country out of 2 decades of deflation. Last year, Japanese shares shone like bright lights on a Tokyo shopping district. But this year, some of the enthusiasm has waned. There have questions been asked about whether Abenomics will work, or whether it will be blown off course by global events such as a sudden slowdown in China. A big test comes on April the 1st when the Japanese government increases consumption taxes. With me to discuss what this means for the global investor and the implications is Nancy Curtin, who is the Chief Investment Officer of Close Brothers Asset Management. Nancy, welcome to the Financial Times.
Thank you, Ralph.
If we look at our chart on the showing the Nikkei, we see that extraordinary rally we had last year. With this consumption tax looming now on April the 1st, how worried are you about Abenomics and whether it's working? As you can see, investors have pulled some of their money off the table this year.
So Ralph, I think the first thing we have to do is put Japan in a global context. Remember, all the markets are fairly wobbly this year, but in point of fact, Japan is down the most. It's actually down even more for a sterling investor than emerging markets, which have had their woes. So there's no question that Japan's been under pressure, and certainly more momentum investors are going to be questioning their commitment to Japan and perhaps beginning to move weights lower. The key thing is the fundamentals, as you spoke about. Is Abenomics working? That's really the important question behind the scenes.
And the answer is?
And the answer is, the third hour was always going to be the most. The structural reform, the third hour, look, monetary easing, yen depreciation, these are things that can happen overnight. Structural reform of economy that's been beleaguered by very, very difficult wage negotiations for almost 20 years, a moribund growth rate. This is going to take a lot longer, and people have been disappointed with the pace of the reform. They shouldn't have expected it to go faster, but they have been disappointed, and marry that with what your comment was, we're coming up to the consumption tax. Obviously, that will slow the economy, and investors are just going to be a little cautious here coming into April.
Let's put this in a global context, certainly a regional context at least, because we have lots of worries also at the same time about a slowdown in China. Now, how does that play on the Japanese story?
Quite right. Of course, China is Japan's largest trading partner, so a slowdown in China, which, by the way, always happens at the beginning of the year, and then we do manage to come through. What has unnerved investors in China is it seems to be more default-related, getting to the issues around the debt in China. But nonetheless, that's been an issue of concern for Japan, the Chinese slowdown. But more importantly, take a look at those export numbers. They've been slower than expected, and of course, we've seen some yen appreciation.
Well, let's take a look at the yen appreciation chart. We had that coinciding with the Nikkei rally. We had the depreciation last year. This year it's picking up. Is that Japan-related factors? I guess there's a lot of sort of dollar influences and US policy influences as well.
You know, key to the restructuring story is not just what happens on wages, but the yen depreciation. The yen has been way too strong to make these companies competitive on a global scene. And so we do need further yen depreciation. It should happen with the doubling of the monetary base. But of course, what have we had this year? We've had yen appreciation. That has more to do with concerns of global investors as to what's happening in the world. The yen becomes a safe haven, as gold has done so far this year in a time of crisis, and we've had a number of things to worry about, Ukraine being the least of it.
Yeah, so yen becoming a bit more of a haven as it used to be.
It becomes a bit more of a haven. Yen appreciation, of course, undermines Abenomics, and we've expected with the yen appreciation to see a bit more monetary ease on the part of Bank of Japan, and we really haven't, and that's been a disappointment to investors.
Let's just look at our final chart, which is the Japanese inflation rate, which is the key gauge to whether Abenomics is working. If you look at that, it looks like it is.
Well, inflation's clearly going up, and that is positive. That's the direction we want it to head in. But we're going to have to see inflation become more ensconced in the Japanese economy. Remember, there's a lot of disinflationary impulses globally, so Japan is fighting a very powerful trend globally.
Nancy, what happens if Japan doesn't get it right? What happens if inflation is not sustained in a positive territory?
Well, we all know what happens when you have a lot of debt and you have deflation. This is not a good place to go. It leads to ongoing recession or ongoing moribund activity and really concerns about the long-term viability of Japan being able to meet its debt obligations. Not a pretty picture. Japan will need to reflate out of this.
It matters not just for Japan, but for the rest of the world, obviously.
Correct. We're in a funny period in markets right now. Seasonally, as we head into April, expect to see a consolidation in markets. Japan is sloppy, the UK is sloppy, US is sloppy. But yeah, there are some other concerns about Japan in terms of the slowdown in exports and Abenomics, third arrow, not being quite as quick as investors would have liked.
Nancy, thank you very much. So a note of caution there, we have to watch for those structural reforms, we have to watch for the impact of that consumption tax, and globally equities going through, as Nancy says, something of a sloppy patch.